Next, we're going to go through exercise 1210 on page 710. And again, we're dealing with available for sale securities and making some journal entries there. Now remember, available for sale securities will be marked to their fair value on the balance sheet at the end of the year. But any gains or losses that we haven't realized yet, and remember that unrealized part just means we haven't sold them yet. Any gains or losses that we have not realized yet on available for sale securities would be a part of other comprehensive income. They would not be included in the calculation of net income. So let's read through it. On January 2nd, 2016, Sanborn Tobacco Incorporated bought 5% of Jackson Industries capital stock for $90 million as a temporary investment. Now, if you'll remember, we said earlier if they have significant influence over the financial or operating activities of the business, then we'd use the equity method. But we typically don't think of a company having significant influence if they only own 5%. Usually 20 to 49% ownership, we would say, would constitute significant influence. There are some other circumstances there. Maybe you only own 15 or 10%, but you're the company's #1 supplier or #1 customer. Then you'd have significant influence even though your percentage was less than 20. But as a general rule, we'll say there's no significant influence if the investor owns less than 20% of the company's stock. So on January 2nd, 2016, Sanborn Tobacco bought 5% of Jackson Industries capital stock for $90 million as a temporary investment. Sanborn classified the securities acquired as available for sale. Jackson Industries' net income for the year ended December 31, 2016 was $120 million. The fair value of the shares held by Sanborn was $98 million at December 31, 2016. So an unrealized gain there of $8 million. And during 2016, Jackson declared a dividend of $60 million. Number one, prepare all appropriate journal entries related to the investment during 2016. Well, first, let's make the entry for the purchase by Sanborn Tobacco of Jackson Industries common stock shares. Okay, so there's our entry to record the Sanborn Tobacco's investment in Jackson Industries common stock shares. We would debit investment in Jackson Industries shares for cost $90 million and credit cash for $90 million, and that was on January 2nd. Okay. Then they go on to tell us Jackson Industries' net income for the year ended December 31, 2016 was $120 million. Well, for net income, there's no entry required if we're dealing with no significant influence and available for sale securities. Okay, then the fair value of the shares held by Sanborn was $98 million at the end of the year. During 2016, Jackson declared a dividend of $60 million. Okay, so I'll enter the dividend entry first. I'm going to make it December 31. And then we would debit cash for the amount received. Well, the amount received, how much of a dividend did they declare? $60 million. And Sanborn owns, what, 5% of the shares, so they'll get 5% of the dividend. That comes out to $3 million. And we're going to call that investment revenue, $3 million as well. Okay, and then also on the 31st, we want to make the entry to record the adjustment to fair value. Okay, here we have an unrealized gain. The investment cost $90,000. It has a fair value at the end of the year of it cost $90 million. Has a fair value at the end of the year of $98 million. So we had an unrealized holding gain here. So remember, gains are credited. So we'll credit unrealized holding gains and losses. And remember, on available for sale securities, those are not a part of net income but are included as other comprehensive income. And then we'll have an addition to the $90,000 balance. That's our fair value adjustment. And that's going to be $8 million. The $98 million minus the $90 million. We're going to put in equals first. Equals the $98 million minus the $90 million. $8 million adjustment. Remember, this unrealized holding gains and losses, it's used for both gains and losses. When it's credited, it's an unrealized gain. When it's debited, it's an unrealized loss. When this account's debited, that means we're going to add to the asset, the investment assets value on the balance sheet. When it's credited, we'll reduce the value on the balance sheet. Okay, now that takes care of our journal entries. Number 2 says indicate the effect of this investment on 2016 income before taxes. Well, it's not going to affect income before income taxes. If so, if it would affect net income. And we know this adjustment here is only included in other comprehensive income. So the $8 million will not affect net income or income before taxes for the year. But this investment revenue would. So here's what it would look like. Investment revenue of $3 million would be included on the income statement. I could put that here. But our unrealized, they say note, an unrealized holding gain is not included in income for securities available for sale. Rather, it is included in other comprehensive income and accumulated in shareholders' equity in accumulated other comprehensive income. So it's not a part of net income, but it is a part of other comprehensive income. Okay, you guys, I don't think you should have any trouble with exercise 1210 on the Connect site after working this one. If you have any questions, please be in touch.